Happy Friday, traders. It is 8 a.m. Chicago time on non-farm payroll Friday, the 4th of February, 2022. This is episode number 2165. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the, whoa, what's going on here? Oh, that's interesting. Okay, just one second, please. I believe this is, nope, that's not it. That's wild. There we go. Some reason my monitor numbers and names shifted. Give me a quick mic check, please. Things shift all the time with Windows, makes it a little challenging to keep things consistent. Um, so, non-farm payrolls, the numbers came out and they were a lot stronger than anybody expected. 467,000 new jobs created in the month of January, despite Omicron and a lot of the constraints that happened. The prior for December was 510. The expectation for this number is 150,000, and the unemployment rate was expected to stay the same as December, which was 3.9%, and it came in at 4%. It uptick 10 basis points. Um, the participation rate is at 62.2% versus 61.9, and the average hourly earnings were higher in month on month, year on year. That's the portion that may be putting pressure on prices currently. So overall, the market, we came in after the Amazon news. Amazon just rocked it. You got to dig into the numbers there. It looks like a lot of the earnings came from a subsidiary that they bought. I don't know. Didn't look into it. Doesn't really matter for my time frame. Um, but we still have continued risk overhangs. As I said, the rally back up towards 4,600 is likely to be labored. It's likely to be a bounce more so than a V bottom that is likely to push us back to all-time highs. There's just a lot of risk overhang, a lot of overhang, and the fact is, the market regime has very likely changed. We know the Fed's disposition has changed, and there's a strong reason for that. So prices higher are likely to have a difficult time. We'll review yesterday, but we got the pop on Amazon, and then from there we've just turned around and sold off. And this is expected. Are we going to take out the prior low down in the 4,200 handle? Not really sure, but not likely. Most likely the market is going to hang here. We're likely to see a dry up in volume and in volatility, as it's difficult to justify a sell, a short position, and it's difficult to justify a long position in this region here. So all we're doing is we're churning and rechurning areas of acceptance that we already know, 45.10 or 45.15 down into 45.22, and so on and so forth. So geopolitical news continues to put pressure on oil. Prices at the pump are going to be a lot higher. Buy your oil early today, buy your gas early today. But there are supply constraints. A lot of them are structural in nature. A lot of them are issues with just getting the labor to get the oil out of the ground. Plus, so the supply promises are not really coming to fruition from OPEC members. So this is a bit of a supply constraint that's caused oil to really pop. I got this wrong. I expected oil to push into 88, pull back to 83, then give us the run to 90, but it's already pushing above 92. As you see, oil is up 100, almost 200 basis points. And then in addition to that, yesterday's hawkish comments from Lagarde, from the ECB, caused the markets to really drop yesterday into our expected target of 44.66. Um, these are reasons, and it makes it sound nice and neat and packaged like they do on CNBC. But to be honest with you, it doesn't, it's interesting, but it doesn't impact how I trade. The fact is, the auction tells us what we need to know for the time frame. And those of you who believe more macro or fundamentals versus technical analysis, just you might like your eggs hard boiled. I might like them scrambled. They're still eggs. We're still trading eggs here. So whatever works for you is good enough for me. As far as earnings, as I said yesterday, with Amazon going after the market, that pretty much ends the big cap or the mega cap or the big movers or those stocks that are really governing a lot of portfolios. We will continue to get earnings. We had Bristol Myers Squibb this morning, Eaton, Regeneron, and so on. Nothing after the close. So earnings will continue, but they're likely to get less and less attention. You'll likely hear about them less and less on the news. So that's where it is. As far as the S&P has traded a lot of volume, 386,000, which is expected for non-farm payrolls. I did expect, I read quite a few kind of opinions on macro, and there was a consensus that this particular event is likely to be quite muted and not as important, since the Fed is already on its path. And there were some rumors or whisper numbers that were in the negative 100 to negative 50,000 versus positive 150,000 consensus. So this is, I think, is a surprise across the board. It's a surprise to everybody that expected 150,000 new jobs in January, and it's a surprise to everybody who is also hawkish and expecting a draw in jobs for the month of January. So overall, the movement's a lot more than what was expected, really. We did about 10, 15 points of range after the number, and I expected that'll be it. So we rested, and then we started to sell off. But the range, 89.5 points, quite wide. We're covering basically a week's range in the pre-open. This gives us a very wide overnight high and low. The overnight stat is questionable now. The overnight inventory is 6% long, so pretty even. And we have a point of control right here at 44.53. We're well below the full session mid and full session VWAP in the S&P. So this is opening up a situation in which we're likely to see a rebalancing or a rebalancing towards yesterday's movement, and then it is anybody's guess from here. Just real quick, we'll look at this from yesterday. Unfortunately, I wish I could zoom this in a little bit better, but this is set to full screen, and you can see from yesterday the expectation was a push. Oops. Things are just not acting right today on this. You can see there's a push expected to 30.35. That's the follow the green line. Follow the green line, the yellow brick road. Follow the green line. The expectation is a push to 30.35 on scenario one. Pull back, take out the low, the overnight low for the overnight stat. Bounce and putts around that 00 number, 0005 area, and then look for it to drop through 00 and 07, really the overnight low, and then drop through to 85 with an extended target of 44.66 is outlined here. Here's what actually happened yesterday. Let's see if it selects. Oh, it selected the right monitor. Congratulations. Here's what happened yesterday. It was very choppy. We finally pushed back up into close to that 35. We stopped just short of the 30 on the first test. We then push into through the 30, the 28 into towards the 35, and then we finally sell off, and this is where things start to get interesting. And then we ended up hitting that 66 target right there. We went to 62, and then immediately after the after the close, of course, Amazon reported the market popped, but we're only looking at the day session. Since it hit the 35, it's pretty aggressive selling on the tape. You could see the aggressors really bringing it back to below zero, and then from there it remained below zero. Big rotation right here is a tell. Those are the rotations where I show that arrow, that impulse arrow on the scenarios. So you could see that there's an imbalance. The orange is much bigger and much deeper than the white. The overall view is that we're likely to turn over, and we did. It doesn't always work out this way. I'm not saying I can predict the future. That's not the case. But it did work out as expected. You know, I put this channel up a couple days ago before we broke higher. I think it was on Tuesday, maybe. I put this channel up, and it's still in play. It's still kind of ping-ponging around this channel. It's kind of interesting. It probably needs to be widened. I don't trade off of channels or anything, but I put it up to just make it more obvious to Convergent members that we are making lower highs and lower lows, and we're kind of proceeding in this channel, and then it broke and pushed through. And that was where we broke, I think, 45.15 and put in singles and pushed and closed strong. That channel is kind of still pushing forward, but I don't really care about it, so I'm erasing it. It's not helping me trade, so I don't need to have it on. Yesterday, a lot of volume took place. A lot of the trading took place in the upper distribution. So from 44.95 to 45.35, which was expected. Then we put in the second distribution down below. Here's the Amazon push. The Amazon push brings us right back to the point of control. You could see us stalling at the point of control. We sell off a little bit. This is a very structured trade yesterday. So if I drew a line right here, I would be drawing a classic support resistance. Well, that was supposed to be a line. A classic support resistance type of situation. You see that? It's not intended to be perfect. It only happens perfectly. Seldom does it do so, and it also only happens perfectly in the textbooks. They select those charts that do it perfectly, but this push right into 45.05, pull back through 45.05, we get a nice little high here, we get a higher high, and then it starts to falter. And as soon as it does, as soon as it pushes through and it pulls back lower, that's when we start to look to trigger short. I wasn't here, of course, for this. This is the overnight session. I prefer to sleep. And then what we did is we pulled back into this low here before the announcement. But you can see that it's really pulling back to these boxes, to these zippers here, and struggling to push through that high. And that's likely to be the case throughout the day. We're likely to form, if you can get in the habit of drawing these boxes, they're quite useful. It pulls back into the box. The box defines our lean, or our area that we predefine for our risk, and then we are able to trade off of it. There's a tiny little box down here, actually, right now. Probably not going to hold, but we found a pretty good balance area. We've traded quite a bit on the low end of the range, and we are on the turn here towards lower prices. So let's take a look at what we've done so far. Let's clean this up. This is basically what the S&P has done so far. And again, we expected resistance into these areas, the 85, the 20, the 44.85, the 45.20, and so on. And I think this was 74 up here. We went to 88 maybe. But the expectation is as it pushes higher, it's likely to run out of steam. And as it turns over, it is expected to go to this chop area right here in the 44, 46 down into 44, 20. So 46 to 20 right in here is expected to be support. This is expected to be resistance right here into the 4600. And so today there's a little bit of room to get us down still into those lower areas, into the 20, and I expect it to form a basing pattern. So what we have is a box up here and a box down here, and a box down here, and I'm looking for it to just fill this in. This is a relatively low volume area down here, and I'm expecting it to gyrate in here. And as a result, I'm expecting the market to start to get locked down. So I'm looking for the VIX to go down, as I said. I'm looking for the range, volatility, and volume to start to taper off until we resolve this area. So be prepared for that. The ranges are still pretty strong. The movement's still pretty strong. So there's a lot of opportunity to win and lose. But overall, don't expect it to be all that strong coming into the next few weeks. So let me clean this up a little bit more. What I'd like to do is grab these weekly profiles. So these are the weekly profiles. You can see how we are on that new all-time high, and I brought this up. It really got stuck. Look at that point of control. Just focus your eyes on the pink line. That is the point of control. That is the most traded price of that week. And then we formed a double distribution on which we created a further point of control. So we've shifted the point of control down, and we accepted this lower distribution from the prior week, the week of the all-time high. And then we created a lower distribution and we walked away. The point of control again shifted lower. The point of control again shifted lower. And now the point of control is a little bit higher. But look at this week's profile. It really is quite thin and unbalanced. It's having a hard time establishing balance. Let me thin out these daily bars and do that again. 1 second. So you could see how from week to week to week, how value or the most traded areas in the auction are progressing. And what I'm indicating here is that this area here is likely to act as support. This area here is likely to act as resistance, which it did. Again, we went to 45.86. That's resistance, that's support. And even if we get through this, eke through that, we have a lot more support in the form of volume down below. So what it's likely to do is to just be log jammed here. And that range is, overall, that range is 45.70-ish to about 44.20-ish, the 150-point range. And we've established a point of control of 45.05, and that's likely to be a magnet even for today. So that's just a bigger picture perspective on where we're headed or what things look like. Let's take a look at what's expected for today and get you on your way to your own trading. Just setting up the chart here. I want to remind those of you on Sierra Chart, again, if you're on Sierra Chart, especially if you're with Transact, which was bought by Ninja, please reach out to EdgeClear to keep your Sierra Chart the way it is and add the Teton feed. We're a release partner of that. Auto liquidation is coming up as well. So reach out to edgeclear.com for all your brokerage needs. And I want to remind you that I'm the founder and sole owner of EdgeClear. So take that into account. Okay, so I'm keeping this really squished, and it seems like a lot of information, but I just want to make sure you see this down here. Okay. This today we have, again, the point of control down here. I know the range is quite wide that I'm showing here, and the chart seems very minuscule. I'm going to actually enlarge it back up probably for next week, eliminate some of the stuff on the edges. So we are right down here against the point of control. The VWAP, the full session VWAP and mid have migrated down. The expectation is an open auction out of range and chop in between these 44.74. This is not the same as 45.70. 44.74 down into 44.20, 44.30. So let's call this 30 to 25 down here. I'm expecting an open auction. I'm looking for it to test down, continue to sell short into the 30.25, consolidate here, and then come back in and hold this area between 30.25 and 74. So let's call this 75 to 25, 75 to 25. And I'm looking for it to consolidate here and just sit sideways, go nowhere for the rest of the session. I expect a lower low. I expect the overnight stat to be taken out. I expect the VWAP full session VWAP, full session mid to hold on a retest. I expect us to poke into yesterday's range, and I expect us to test into the 74, 75 area and then just get exhausted. Non-farm payroll days tend to make their moves in the first hour or two, and then it just drifts for the rest of the session. That's your primary scenario. The secondary scenario is an open that tests down, immediately pushes higher, butts its head against the 75 here, and then starts to creep up into the balance, the upper balance from yesterday. This high volume area that we have up here at 45, 45.15, 45.10. So that'll be 10 to 15. And that brings us back into this high volume node and into balance for the rest of the session and into the weekend. Those are the two key scenarios today. Good luck, and mind your risk. You're going into the weekend, mind your risk. Try not to trade at the open. Let it kind of set up. Don't do what I did last Friday and just try to pick off trades too early. And if you do, give yourself time in between trades. Very important to have a lot of time standing by at the beginning of the day, as things are not as clear as they become later in the session. Okay, good luck.